Hi guys, welcome to another video. In the last video, we discussed about the term sheets and the requirements and the terms and condition of that particular term sheets. In this video, we are going to discuss about the representations of the party and the covenants of the term sheet. So this section contains the clauses for a proper representation and general meeting, like it contains the various covenants and the non-transfer of promoter shares. Promoter shall not, during the terms of the agreement, transfer any of the promoter share, like lien, pledge, mortgage, charge, hypothetical, etc. Or any voting rights of the interest in the promoter shares, either directly or indirectly, voluntary, involuntary, by corporation or law, or without the prior written consents of all the investors, directors, and on the subjects of the such terms and conditions of as the investors may be, in their sole and absolute discretion. The promoters further agree not to transfer any shares held by the promoters for the period of 1 year from the effective date. So it contains the right of first offer to the investors, like right of the first offer to investor in the event of promoter wish to sell any promoter shares, then such shares must be first offered to the investor proportionately. Then in the event investor do not purchase such shares, then the shares can be sold by the promoters to a third party within a period of 45 days from the refusal by the investors on the terms not less favorable than those offered to investors. Purchaser of the shares shall sign a deed of adherence if the such purchaser is within the control of promoter or the affiliate of the promoter. So, representation and warranties. Like, in order to induce the investors or to invest in the company, each of the promoter in the company jointly or severally make or give the guarantees, and each of them acknowledge that the investors have agreed to enter into this agreement by upon the relying of each of the warranties. Like no standing with DD carried by the investors, all warranty are deemed to be material. Warranties as provided in the Schedule 5. Like information set out in the each of following articles is complete, accurate in the respect, save, and expect for disclosure that elsewhere. Within the agreement, by the separate communication in the writing, duly acknowledged by the investors. None of that investor is misleading in any material, particularly whether by inclusion of misleading or any other informations. Adverse report. There has been no adverse report concerning the companies or whole, any part of the property or undertaking by the accountant or financial or management consultant period of 3 years before the date of agreement. Except those approvals which are required to be obtained by the investors, each legal regulatory approvals required for the investors by the investor in the company that is duly obtained or shall be obtained prior to the respective closing date. Any condition imposed on such approval shall be duly observed. Solvency. Like none of the following has occurred or any notice has been served in relation to a company, like application to the court for order, making of an order, or liquidate or receive an appointment in the place of bankruptcy, resolution for winding of the company, convincing of the meeting or passing a resolution to appointment an official liquidator, scheme of arrangement or compositions with the reconstruction arrangements or assignment of the benefit for the other arrangements, etc. The taking of any action to seize, take the possessions, or appoint a receivers or receivers and manager in respect of the shares of company. Company has no guarantee or not otherwise liable, potentially liable for the debt obligation of any other person, except that of the employees, subject to the following guarantees given to the financial institutions. Letter of comfort, subject to what has disclosed in warranty, like company has not provided a letter of comfort or made a representation to the undertaking. So that's another task, in the solvency of support, like it's otherwise connection with the willing financial assistance. Next thing, it's intellectual property rights. Let's say something that can be tangible, like is an intellectual property right, IPR. Company owns and provision to ensure that all the intellectual property developed by the company's employees belong to the company only. Company owns and has the valid right to use all the intellectual property, and that is material to the operation of company. Following are the accurate and the complete list of intellectual property owned, licensed to extent used by the company. So this one is that. Then we have the term sheet, preemptive rights for the additional investment or anti-dilutive provision. The company make any future share offering or a venture capital investors will require the right to maintain at least percentage stake in the company by participating in a new offering up to the amount of its pro rata holding or under the same terms and condition as the other participant investor does. So this is one thing like we are looking right now. And apart from that, there's an anti-dilutive provision that's venture capital investors require the right to protect the value of their stakes in the company. If the new shares are issued, at a valuation which is lower than that of which is originally invested. So there's a various clauses that providing the different degree of the protection for that. So it's the anti-dilute provision hold further issues of the dilution instrument, and another things that are working very closely for the different parameters of the market, and that is another segment for them to work on that, and to figure out the more reliable opportunity for any of them to work on the significant market collaterals areas. So this is one like working right now. So let's meet the next video for the next session.